Good morning, everyone. Welcome to the panel discussion on the Housing Sentiment Index report. I'm Abhishek Bhadra, Head of Research at Magic Bricks. Joining us today in the discussion is Mr. Vivek V, Chief Marketing Officer, Shriram Properties, Mr. Rakesh Reddy, Director, Aparna Construction, Mr. Ellen Jha, Promoter, SKA Group, and Mr. Bhavik Bhandari, Chief Sales and Marketing Officer. Now, we are at a time when property markets across India, are continuing an upward trajectory. We are in a bull run, close to 3 years now, and it's very important in these times to measure how customers are perceiving the market. What are their attitudes towards home buying across the key markets of India? With that aim, we have released the flagship report on Housing Sentiment Index, which kind of outlines the home buyer sentiments and preferences across the key property markets of India. I'll start by giving a brief presentation on the key findings of this report, and after that, we will open the floor for Q&A. The reason why we came up with this report was that there was a need for a certain metric which could measure how customers perceive the market, the product that they are buying, in terms of a rating, right? And especially in today's times when the market is, consistently going up, prices are moving at around 25 to 30% north in across all the key cities of India. And with this metric, it helps in gauging what customers feel about the market, right? And we are 3 years into this boom cycle, evaluating preferences and giving a weightage or giving a value to this particular attitude or sentiment of a customer becomes very important, right? It also serves as a barometer for key stakeholders like yourself, government, NBFCs, bank, in maintaining equilibrium in the market, bringing more transparency, and also, identifying potential demand supply imbalances, predictive trends. So a lot more can be done with this particular metric. The key outcomes or the key findings of this report were the top 5 cities in terms of the highest HSI was led by Ahmedabad with 163, followed by Kolkata at 160, Gurgaon at 157, Hyderabad at 156, and Noida and Greater Noida at 154. Right, so these are the top 5 cities when it comes to the top 5 markets where customers are most confident in buying a property today. Now, these ratings are based on a scale of 0 to 200, with 0 being contraction, meaning that customers are bearish, they're feeling bearish about the market, 100 being neutral, and 200 being extremely bullish about the market. So what this also means is that with India's HSI valued at 149, means that for every one bear today, we have 2 bulls in the market, right? Which also augurs very well for the market, and in the current scenario and also over the next few years, right? Following with the age-wise HSI, Gen Z and Millennials, which are your typically 20 years to 35 years age group, they accounted for the highest HSI, followed by 40 to 50 years, and then 65 to 74 years age bracket. We have seen in the last couple of years that this particular working age group of 20 to 35 has been the key customer base for a lot of developers. We have spoken to a lot of developers, and that's what we have come to find. And also the survey that we did, in arriving at this HSI, also gave us, answers which aligned with this particular trend. Right. In terms of budget group, clearly affordable segment is there, but your ultra luxury segment, which is 3.5 to 5 crore budget group, is where most of the customers are confident about buying the properties today, followed by your 1.5 to 2.5 CR group, and then your affordable segments of 20 to 50 and 50 to 75 lakhs. Individual houses, led in terms of the asset classes. 152 was the highest HSI which was recorded for individual houses, followed by multi-story apartments and villas, and then plots. Under construction properties seem to be the flavor of the day today, which we also have seen with the other report that we've published, which is Prop Index, where we kind of analyze the traffic data on our website. And also with this survey, what we have come to see is that People are preferring under construction properties. They are very confident that this particular asset class is going to perform very well in the market over the next few months and quarters, right? And hence, this also shows in our result as well. So a 157 HSI is higher than the average of India's HSI, and hence, you know, people are very confident about this particular asset class. Uh, in terms of income groups, clearly your 10 to 30 lakh income group, typically buyers who have just recently entered the market, who have just kind of who have done like 5 or 6 years into the job market, and they are earning around 15 to 20 lakhs a year. They seem to be very confident of the market today. The highest HSI was recorded for this segment, and the reason that we found out with a survey why people are looking to invest in real estate was that they are looking for rental yields and capital appreciation. Clearly, also shows that after home ownership, capital appreciation seems to be the second most, sought after thing for their investments when they are looking to buy a property. Interestingly, banks and NBFCs are where the home buyers are looking to get their funding from. Also, their confidence level in getting funding from typically banks are very high. NBFCs accounted for 3%, but the HSI for NBFCs were very high, was 156. The average capital appreciation expectation over the next 1 year was 5 to 10% amongst home buyers, which seems to be a moderate number considering the kind of appreciation we have had in the last couple of years. So, while the market seems to be, in a bull run, it seems to be going upwards, but there could be a possibility that, equilibrium could come in over the next couple of quarters, right? And the timeline to buy was 1 to 3 years, wherein buyers typically answered that they are looking for investing in a property between 1 to 3 years. Now, that could be a reason as to they are looking for property prices to come down, and maybe they are just waiting for that to happen, and after that they're going to invest, right? So these were the key findings of the report, and with that, I come to the end of the presentation. And I would now like to hear your independent opinion on what do you feel of the findings that we have shared. And, India obviously is at the top, in terms of uh, uh, having a very high sentiment at 149. I would like to hear your opinion on this particular trend. Uh, can we start with Mr. Vivek?
Yeah, sure. Thanks for having me here. It's a pleasure to meet all of you. So I'll tell you what I've observed. So I saw your report as well. While the sentiment is very high on the income groups between 10 lakhs and 30 lakhs, right? But again, the sentiment is also very high again on the 3.5 crores and above the ultra luxury segment. So there is kind of a dichotomy over there when you look at the person who wants to buy and the product that is there to sell. So I think bridging that gap might be a bit of a tough call. But nevertheless, if you look at the market which you just mentioned, the 10 to 30 lakh, this usually falls under the mid segment category, right? And here in Shriram, especially in Bangalore, we've been operating that segment for the nearly 25 years right now, right? And one thing we have constantly seen, and this being one of the largest IT corridors, the consumption is quite consistent over the years. Okay, especially post COVID, I have seen that people wanting to buy a home, and the best part about Bangalore and cities like Bangalore and Hyderabad are nowadays you have people from all walks of life. You don't have people only from Karnataka alone buying. You have people from all over India who are part of Bangalore now. They consider Bangalore as their home. Okay, they are wanting to buy, but they are not going to that ultra luxury segment. So I think the demand continues to be there. Recently, we did a launch as well where we sold out in 2 weeks. We sold 77% of our project. I'll be honest, we never expected that to happen, but and this was closer to Electronic City. But having seen that product and the way that the consumers wanted to participate in that launch, I'm extremely confident over the next few years that these segments are going to really bring the uprise to real estate. People want to buy real estate because, okay, we are very ingrained in our society. We want to buy because somebody, a family member has told us that, you buy real estate at a very young age. Usually by the time we are about 27, 28 is when we think about it and we actually act upon it. Until then, we are just deciding whether our finances can work or not. So you're absolutely right. But I would say more from 27 to 35 is that right age where people actually buy real estate. So I'm very confident and of how this is headed. And obviously, because of the rising inflation over time, I see that people will eventually, they don't want to get into other asset classes. They feel that real estate is a very secured asset class, which is where I see the confidence levels also coming in from there.
Great. So, Mr. Reddy, we heard Vivek talking about what's happening in Bangalore. Do you see a similar trend in Hyderabad in terms of segment-wise demand, income group diversification? What is your opinion on this?
And just taking off from what Mr. Vivek said on the COVID, post-COVID, the kind of takeoff that real estate has seen in Hyderabad has been phenomenal. I think nobody expected it to take off that quickly and at that steeply as well, right? So that has been very good, and in fact, that's reinforced people's sentiment towards investing in real estate because they see it as a asset that's really appreciating, right? And taking off from the report also that you have shown that in Hyderabad, most of the properties have now crossed, decent properties have crossed a budget of 1 crore. Now they're in the range of between 1.2, 1.5, all the way up to 2 crores for a 2.53 BHK apartment on the western part of Hyderabad, which is where most of the action is. And also from your report, that's one segment that's really showing a very high HSI score, which is in tune with what we are seeing on the ground as well. Obviously, the 3.5 to 5 crore segment also, which has shown a high HSI segment, is also doing very well in Hyderabad. Some of the larger sizes, typically between 4,000, 5,000, are also taking off, especially for the business segment. But much in terms of volumes are being driven in that 1.52 crore. And what the research shows and what is happening on the ground correlate completely. And also to the point that Mr. Vivek was making, Bangalore and Hyderabad per se, the most of the demand is not just being created organically from the native Telugu speaking population, but also most of the people who are coming into Hyderabad because the opportunity is being created here. And I see that this is only going to improve going forward, especially with all the push that's coming in terms of the infrastructure that's being created. The second order effects will trickle back into the economy and then again start creating more jobs in that segment, in the GCCs as well as the BFSI segment. So that's only going to keep improving going forward.
Correct. Coming to Mr. Bhavik Bhandari, Bhavik, what's your take on the Mumbai market right now?
Abhishek, first of all, thank you for having us here. Great initiative by Magic Bricks, and to listen from some of industry known names. Vivek, I know him personally. Rakesh at Reddy Group, and also Lalitji. A great. So I think it's a very positive housing sentiment index. If you see specifically in Mumbai, if you there are 2-3 analogies that are going exactly the way your report suggests. The luxury segment in Bombay is doing very, very good. There is a lot of demand. We are operating with our portfolio almost 67% in luxury segment. We are seeing this happening. What is happening in Bombay, especially 1 crore for Bombay is basically affordable. So that's not the case. Yeah. So the segment that you showed, it has really impacted in positive way. Second, what I also see, the reason, if you see today's Economic Times report revalidates your thing, is that, the 7.3%, it has now gone to 5.3. So the saving index of India has gone down is because a lot of people are buying homes and the financial thing, and they are taking more loans. Second, what has happened, what Vivek and Rakesh was also saying, post-COVID, the trend has changed that, the three things have happened. One, the desire for buying home has increased significantly. There was a pent-up demand of people who were thinking that they are unstable about career and future, have now known that everything is stable, government is doing well, economy is doing well. Third, areas have increased. So for an average area where India consumption was between 500 to 600, has now been 900 and 940, which means all the three triggers have given, and that's one reason why last 3 years we have seen a significant bull run in real estate. Another key factor, if you see, most of the time when equity market do well and when people make money, they go back to secure a very good asset, and real estate is the first priority. A lot of people in small caps, mid cap, and large cap people have earned a lot. All the investors whom I meet, normally they say they buy the stock, sell, get profits, and then invest in larger homes. So, from a sentiment perspective, it is very good. Millennials are the one big game changers. They have added up significantly, and this age group is very optimistic about their future. They are very aggressive about the brands because they look at brands, lifestyle experiences, and that's where the brands have also focused on them. Just to give you a statistics, 2 years before, millennials were 15% of our consumer segment, while in the last 2 years it has moved up to 33, more than double. Yeah, so a lot of these people are taking. In fact, Gen Zs have started. What we were rightly saying is that 27 pay they are deciding, but a lot of these Gen Zs with who have got married recently, both dual income, doing fairly good, no liability currently, want to invest in asset. So that has been a significant improvement in the overall segment and sentiment.
Right. Mr. Jha, can we have your opening statement here, please?
Yeah. In NCR, after COVID, we have seen a lot of growth in terms of number of projects as well as number of area being developed, and size of the flat also, and price has also accordingly gone up. But my viewpoint is that in India there is a requirement of a smaller flat, because a smaller flat which is nobody is making in NCR at least. NCR as on date, there is no 1 bedroom or 2 bedroom flats are being built by any builder, including Noida, Greater Noida, Gurgaon, Ghaziabad. 1 or 2 builders, very small segment they are making it. But in my view, the major thing is that 10 to 20 lakh income bracket, who was able to afford earlier 3 bedroom, now they are not able to afford 2 bedrooms also, because EMI has gone up, because of rate of interest has gone up, and price has also gone up significantly. Like say Greater Noida earlier was around 5,000 rupees, now it is coming around 9,000 rupees. We are also doing in smaller flats earlier, but now we have also started making, because market is like that. So in my viewpoint, this housing, a small housing, 2 bedroom or 1 bedroom, or a smaller 3 bedroom, that will be the major market in coming years. That is my viewpoint. Thank you.
Great, thank you. Thanks, all of you, for your statements. Now, on that note, I would want to make another statement here, which is we also saw that slightly, larger apartments, which are in the tune of say 1,500 to 2,000 square feet. So we asked our respondents that what is your preferred size in terms of a house that you want to buy. So more than 50% of the responses said that they are looking at buying a property which is in the range of 1,500 to 2,000 square feet. I heard Bhavik talk about how in Mumbai certain apartment sizes have gone down and people are now looking at slightly smaller and compact apartments. So do you think this is something which is happening in a certain just in a certain part of India, or are we looking at people actually moving to more compact apartments across India? And if we can have Vivek talk about this, please.
All right. This is very unique for everyone, right? You want the largest apartment possible at the lowest cost.
Right.
But honestly, it will not always work like that. Places like Mumbai, where I was earlier, Mumbai definitely is a market where, if you notice, the inflow of people that come into a Mumbai market, okay, is significant every day. Now, they want to live in a property because that gives them the security. So Mumbai keeps expanding. It's a very linear city, right? So it expands northward and or eastward. That's all that Mumbai can expand. But unlike places like Delhi or Chennai or Hyderabad or Bangalore, which keep concentric circles keep growing around it. Now, yes, while the desire for larger apartments are there, but I think somewhere the common sense still prevails. Okay, people figure out that maintaining a large unit also is not practical. Today we have very typical disc families, double income single kid or double income no kid families, right?
Right. Yeah.
And it becomes very crucial and critical to maintain the apartment, as well as not just having a large apartment. That's that's societal pressure maybe, but what makes sense for them as a unit is far more important. In a place like Bangalore, I have been noticing over the last maybe few years now, post COVID, yes, the want for an additional let's say a bedroom has increased, because IT as a segment itself, a lot of people now work from home, right?
Right.
They started making this thing called SOHO, small office, home office, right? Which is maybe half a bedroom, which they keep aside, and they utilize that space for office work, and they don't want to be disturbed during that time by any family member. Saying thus, still I see a large demand coming from the 1200 to 1400 saleable, sized apartments. That still continues to happen. Products across different developers in Bangalore have been these are the sizes which are the fastest selling. Larger units actually have not been that much in comparison. I've seen this trend significantly in Bangalore. I think that it's probably the same trend in most cities. Delhi and Mumbai have its own. They're an anomaly of its sort, right? But I feel that as long as we create products which are uh, taking the customer's needs in mind, okay, and then we create a product around it, that's what sells the most. Okay, and I think most developers have kind of understood that science right now.
So Rakesh, under construction properties seems to be the flavor today. A lot of customers are looking to buy under construction properties. Their preference is buyers towards this segment versus ready to move, which was probably there 2-3 years back, wherein people were more interested in buying a ready to move in property. Why is this sudden inclination towards under construction properties? And this we are seeing pan India. What do you see as a key trigger for this, Rakesh?
I think there are a couple of factors at play here. Obviously, one, immediately post COVID, there was an urgent requirement to stay somewhere because the people who were staying in rented apartments or who had to move back to their places of birth had wanted to have a residence. So there was definitely a preference for ready to move in. But as things have progressed and stabilized, and also the stock of ready to move in has come down. So there is always a greater choice for people in under construction apartments. And as we have seen in the last 2 years, there's been more launches, new launches that have come into the picture. So the choice has gone up, obviously. So the preference for under construction is definitely going to be greater than the availability and preference for a ready to move. And that's the most important factor at play here.
Okay, Mr. Jha, your comments on this?
Yeah, in NCR, most of trend is that pre-launch and launch newly launched property, as well as under construction property. People are buying at the most, and it's a great success as on date. But main reason, what I think, is the price appreciation. What they think that they can move out after 1 year or 2 years as an investment purpose. That may be the main purpose of under construction purchasing under construction property, and they are planning to move after 2-3 years and get the profit out of the investment. That is the major thing. Because they don't have to put the stamp duty and other things in under construction property. Ready to move property, you have to pay everything. Under construction, you need not to pay that. That may be the reason.
Thank you, Mr. Jha. So we also observe that while of course there is inflation in the market today, uh, you know, people are very aspirational in India. If you compare what was there say 5 years back, today somebody who is earning a 20 lakh per annual income is looking to invest in a property which is great, which is priced above 1 to 1.5 cr, right? So typically they are investing somewhere between 4 to 5x of their annual income in real estate, right? And most of these investors are looking to invest in real estate. Their preference is real estate over equity and stock and gold and other asset classes. So we have seen a sudden shift in the investment preferences of investors today. uh, I would want to hear your expert opinions on this. Bhavik, if you have any comment on this.
So if you see, Abhishek, there is two things. It's not just that the preference has been towards the real estate or stock. What has happened, if you see in the report that has come from your guys, is basically people are upgrading. So hence, if you see between 1,500 to 2,000 carpet areas are increasing, and people are buying with a higher ticket size,
Right.
specifically in metros like Mumbai, is because the person is doing well, because the economy is doing well, stock market is doing well, his company is growing. There is no uncertainty of his job threat. There is everyone is thinking that there is a lot of buying and a lot of things happening. Government GST collection has moved up more than a lakh. So what all the signs are showing that it is positive, which means the sentiment in the mindset of a consumer is forward thinking, is not in the conservation mode. Hence, he is going to buy those stuff because he thinks that that in the next 4 years, by just taking this, I will start staying and I have another 20 years to pay the EMI. While every year I will get an increment in my job salary and I will be able to do. And that's one of the reason why you see a lot of this buying happens. Specifically to the shift also, I think it's always been predominantly from not now, even when the markets were high or not. Consumer has always looked at home as in the marker of their success. If you see, even Mr. Mukesh Ambani has to use his net worth to have Antilia, to which is one of the most expensive apartment or a house to have that, right? So people have realized when they are doing good, or in order to showcase their social status and the quotient in the society, they have always gone back to buying homes. But when the other sources, mediums have gone increased, because the awareness for stock market, the awareness for mutual funds, awareness of investing in gold, and if you see the bull run that happened in gold in the recent past, going up to 75, and with a prediction of going up to a lakh rupee for a gram, that's gonna be the key game changer. And hence you will see a lot of investment happening, and the mindset of this age, the consumer, because millennials are almost 30-35% buying. Uh,
Right.
used to happen in old was the people above 50-55 used to look at investments, while now the age group is there, so he is not buying one home in his lifestyle. He's looking at least 3 to 4 homes, and that's the reason why you will see a lot of this aggressive investments happening towards this.
That we also saw that the waiting period for an average home buyer is between 1 to 3 years. So typically they are looking to
Yes.
wait for at least 1 year, 1 to 1.5 years to buy a home. So is it because they are looking at prices to come down, or what do they have in mind?
If you ask honestly, while we interact with a lot of customers,
Yeah.
sometimes when the customer is waiting because he feels that today he can afford, for example, a 1.5 crore apartment which is 2 BHK, but his desire is to go for 3. So he's in the fix where should he do it now, or should he wait, or should he increase his income and then do it. So a lot of times you see 60-40, 60% of the people, if when the developers create FOMO of sales by saying that price is moving up, inventory not there, choice of view, floor, nothing. So the consumer goes for it and buys it. But the people who say that okay, anyways, there is a lot of supply in the micro market that I'm looking, for example, Thane, there are all ACAT developers present in MMR in that location. So even if I miss out on a ACAT developer inventory, I have another option. But places like Juhu, or places like Sobo, or places like Kandivali, or places like Andheri, those places, Bandra, you have very limited good ACAT developers present in that micro market. And if you want a product, great one, and you want that location, then you take the fund. That's what we have seen. So wherever supply is more of good brands, you will see the waiting area going slightly up.
Right, so it's an interplay of
Yes.
choice and price.
Yes.
Got it. Now if I talk of city-wise HSI scores, it's in the range of 141 to 163. Now 141 is for Bangalore, which we have. We have seen that Bangalore is kind of just going through some urban challenges in terms of water scarcity and some other challenges which are crippling the city right now. So Vivek, what do you think of this score? While it's still very high, 141 is a pretty high score for for Bangalore. But like it's significantly less than say a city like Ahmedabad, which is at 163. So
Right.
how do you compare both these markets today? Say, and we have seen that Ahmedabad has been on the higher side of things. It has been experiencing exponential growth in the last 1 to 2 years at least. But I would want you to talk a little bit about Bangalore and why we are seeing this low sentiment score for Bangalore.
Honestly, I'm not sure why the low sentiment for Bangalore, but yes, Ahmedabad has been a very consistent market, right?
Yeah.
All through. Ahmedabad has not seen that sea change or the variance over the years. Bangalore has seen that because there are different pockets of Bangalore. For example, many years back, Electronic City, which is the southeast part of Bangalore, was constantly developing, and that really developed so well. So 8.5 kilometers, 9 kilometers from Koramangala, that entire belt, which became the entire IT corridor of India, so to speak, that developed so well. And it reached a saturation point, and where people are now going closer to Hosur, which is actually part of Tamil Nadu, right? New pockets have emerged over the years, right? So now suddenly North Bangalore as a land market has emerged. Now people are not sure whether to buy home or to buy land. Okay, land has always had drawn attention in the south. Of late, you will see maybe few players in Maharashtra who are getting into land as a project, as a development, and they're doing extremely well. But South India was always open to land. They loved land as a asset class. So now that entire shift has moved towards North Bangalore. Places like Whitefield, which were also IT hubs earlier, have become so exorbitantly expensive today that it's become unaffordable to some extent, right? So when they look at land, they buy land and they figure out, okay, let me be part of the real estate ladder, okay? And then, like Bhavik said, then they decide later, buy a 2 BHK right now and then figure out over the next few years whether I need to keep the 2 BHK or sell it and buy a 3 BHK, which is the eventuality. Similarly, in Bangalore, people, while they're not buying apartments, so to speak, they say that, okay, fine, the ticket size of a land is much cheaper. Let me be part of the real estate boom. At some point, there's one developer in West where consumers have gotten 100% appreciation in a year. Very, very good developer as well, right? In Bangalore. Now, obviously, this is an anomaly. This is not normal, right? But the growth is happening now. The sentiment, again, people are going through that phase where I'm sure across India everyone is saying that Bangalore doesn't have water. Yes, Bangalore is going through a bit of difficulty on the waterfront, but I wouldn't say there's no water. Okay, people still buy water. There are other places across the country where people also buy water. I think it's been more hype than anything else.
And I think it's about the mindset.
It's about the mindset completely, right? Bangalore will continue to attract a lot of fresh talent in the IT space and other sectors as well. Banking is also doing extremely well in Bangalore. But because there's this new influx constantly, people don't know where to buy. It being a round city, right? People don't know whether they should go to the west of Bangalore, the east of Bangalore. People still are yet to figure out their journey in Bangalore. So I guess that might result in some reason of the sentiment being a little lighter. But I feel that it is extremely strong, having seen the recent trends.
Got it. So Rakesh, Hyderabad seems to be galloping around, 156, very high sentiment score. IT industries team seems to be thriving in the city. What do you feel of? How do you see this score being attributed to Hyderabad? Any particular reasons behind it? And how do you see the IT sector impacting the real estate market over the next couple of years in Hyderabad?
Yeah, I mean, just before I answer the question, I just wanted to make 2 points. One, on the previous question for Mr. Vivek about the sizes.
Yeah.
So definitely post-pandemic, there has been a general increase in size for 2 BHK from about 1100, it's gone up to 1250, closer to 1300 now. And a 2.5 at 1500, 1550, and 3 BHK from there onwards. But like he also made, the point is about needs and wants versus what is affordable. So when you launch a project, obviously people prefer a 3 BHK, the slightly larger ones about 1600, 1800, because the launch price makes them puts them in a position to be able to afford that. As the project progresses and towards the completion, it's always the 2 BHKs that tend to go at 1250 to about 1400, 1450, because that becomes affordable. So even though people want a 3.5 BHK, but if they want a particular apartment in the project, then the affordable thing comes into play, and then they go for the 2.5, right? And on the second point, that was from what Mr. Bhavik said about sentiment. So end of the day, when people want to buy a house or a land, um, even though it's a need for them, the sentiment is a big part of the decision making. So when things are very gung ho, they're all happy, so they can let go of the purse strings a little bit, and then go indulge themselves in trying to maybe buy a bigger sized apartment or a bigger sized land, or for that matter even just invest, make the decision to invest rather than just staying back and holding on. So that's also one reason why the market in general in Hyderabad is doing good. Coming back to a question on the IT sector, I was just talking to one of the MDs of the top three brokerages, and then he was telling in the last 3 months, more than 35 GCCs have come to see Hyderabad as a
that's what
evaluate Hyderabad as a market for picking up space. And in the last 1 year, if you have seen, Abhishek, it's the GCCs who are the largest absorbers of real estate in India. And what he tells me is they're expecting maybe another 140, 150 more GCCs to come into India to start evaluating spaces for their country expansion. So all of this generally augurs very well for residential real estate per se, because all of these jobs, net jobs that are being added. In fact, while TCS and Infosys or Wipro, for that matter, have had a net drop in employees, these guys have picked up the slack and added back into the economy. So the more these people are going to come back to evaluate, the more jobs that are going to be created, and the more demand for therefore for the residential real estate. Which is why I'm completely in tune with what you have projected for the HSS score for Hyderabad. I think it's going to be and do very well.
Great. So I have one last point which I just wanted to take your opinion on, all of you, which is, the responses clearly outline that there would be a moderate price increase of 5 to 10% in the next 1 year. While even if I look at our data and what has been projected by some other research companies as well, typically 20% to 25% has been the average price increase over the last couple of years for all the key cities. Now if I look at 5 to 10%, that seems to be an aberration in terms of price increase over the next 12 months, which is a moderate, if not very high. So what is I would like to hear all of your opinions on this, and I would like Mr. Jha to start with this. How do you see the price appreciation of the next
check,
1 year?
what you are saying, 5 to 10%, that may be overall pan India. But
Yes.
if you consider NCR, in where we are operating in Noida, Greater Noida, we are hopeful that price increase will be between 10 to 25%. 25% next 1 or 2 years, because supply of raw material, like the land is the major raw material for us. So supply of land is limited because it's a leasehold property, and the authority is really auctioning the plots. And that plot, one plot which you are getting at 50,000 rupees per square meter, now next is coming around 1,15,000 rupees. So land cost is going up, raw material cost is going up, people's aspiration of facilities is going up. So price will not go down. That is sure. Price will go up at least in next 1 or 2 years, 10 to 25% in our area. That is our.
Okay. Bhavik, can we hear your opinion on this?
Yeah, I think nationally, what you said is a correct trend, but specific to cities, as I said earlier, it will be linked to two, three parameters. One, any location where you will have less supply and great potent demand, you will see a lot of price going up because the ACAT developers will exploit that situation.
Yeah.
So you will see increases up to 15 to 20% because that's how they will operate. Because if you see last month, there was a report from KPMG on the developers' debt, and everyone in the top 10 have moved up because they are all aggressive betting about new land acquisitions, and a lot of happened in the last 1 year. And so, in order to furbish them and to start work, they will go up in the prices. Second, wherever you will see a lot of supply, so much of option available for a consumer, and where there is no fear of FOMO of losing out. If he takes an action, he will wait. What will happen once he waits? The developer who is not having a holding capacity or who's been loaded with interest debt, he will come up in the market with differential pricing, and he will go aggressively on the prices. Like I will give you an example. A cat developer in a Bombay in a location like Borivali has gone up by 30% increase in price in last 1 year, while the next door neighbor, same location, but a brand different, has not even increased 5%. So you will see those differences based on the your personal developer capability of holding and ability to service the debt. Third, very important, which is a very critical factor in Bombay, wherever you will see some pockets which are predominantly known as price increase locations like Juhu, Bandra West, Carter Road, or Prabhadevi, Worli, or
Yeah.
you will see something which is present. So those kind of locations, you will see a difference in prices.
Vivek, your closing comments on this?
Sure. You will always find heat pockets in different markets, right? I think largely when you find any recent infrastructural development within a certain micro market, that commands uh, that commands a little higher price than usually other markets in comparison. We would definitely see this in places like Bombay or Delhi or whatever, right? Bangalore is also seeing these trends of late, where anything in vicinity of a ring road really does extremely well in terms of price appreciation. So if a customer is expecting a 5 to 10% nationally, I don't think it's wrong, but I feel that it can be even higher than that sometimes. Like Bhavik also mentioned, with limited supply in a high demand area, could also have a huge factor. There are certain regulatory changes that happen which favor buyers, and that also has a huge demand pull, right? Demand pull will actually ensure that supply is also limited. When you balance this trade out, then eventually you have a price appreciation over the longer term.
Yeah.
And I see that happening quite a bit now. And I think over the next 3 years, they're quite favorable for India as a story. These price trends will keep happening. Okay, changes will keep happening. New markets will emerge. New infra will keep coming up. So I think it's exciting times for the next 3 years.
Mr. Reddy, your closing comments?
I mean, like all the panelists have said, there are various factors at play. Main case ends for real estate, which is land, cement, and steel. All of them are showing, signs of increase much beyond the 5 to 10% range. So along with this, the demand factor as well as specific localities within the market. All of these are going to influence how much can increase. For the developer per se, he's going to have to average out, and in certain localities, he will not be in a position to charge more, so the appreciation there may be lesser. But in localities where he can make up for it, he's going to charge more because on an average, at the end of the day, you will have to be more than what your costs are to keep up, right? So the 5 to 10% could be an average, but I would say that the increase is going to be much more than that.
Great, thank you, gentlemen, for your comments. That brings us to this session today. I would like to thank all of you for taking out time and sharing your invaluable insights. I hope you all enjoyed the conversation, and look forward to doing this again. Thank you.
Thank you, Abhinav. It was a pleasure to have and to listen to other industry leaders also, and good index report. We'll use it in a lot of our conversations in PR to convey to customers, to everyone, that they should keep looking at investments in real estate, because all the trends that you have shown is all positive.
Thank you so
Thank
much.
you.
Thanks, Vivek.
Thank you,
Thanks,
Abhishek.
Rakesh, and thanks, Mr. Lilly.
Thank you,
Pleasure
Mr.
talking.
Vivek,
Thanks.
Bhavik, and
Thank you.
Thank you, everyone.
Thank you.
Yeah.